And now let's invite our first guest of the morning. Joining us now is Richard Harris, Chief Executive at Port Shelter Investment Management. Good morning, Richard. Thank you very much indeed for joining us. Well, we were discussing whether a kind of a central bank put is emerging, with some Fed members saying that we shouldn't hike too quickly, and BOE, putting in liquidity, turning taxes getting overturned. Do you think now a central bank put is emerging?
Well, first of all, happy Diwali.
Thank you.
I don't think the Fed actually is going to be quite as happy. I've seen the story coming out about the Fed maybe starting to ease, starting to soften. I find it very difficult to believe. We still have sustainable inflation in many areas. There's been no real evidence that that's going to slow down. We know it's going to ease. And we know prices have been coming down, but there's still a lot of expensive inventory in the system, and that's going to prevent prices coming down. So I think this so-called Fed put is not really there at the moment. And the key evidence really is if you look at the US long bond, it's 4.2, something like that. The last print of US inflation was pretty well near double digits. So you have to come down a long way in inflation, even to be anywhere near that 4.2. So I can't see any way that the Fed is going to be able to keep inflation in check if they start to soften now.
Okay, Richard, good morning and happy Diwali to you as well. Thank you for your wishes. This is an auspicious time of the year here in India where people take a lot of token trades and sort of set their targets for the year. How do you think one should approach the Indian markets now? There's been a stark outperformance through the course of the year. What next, and which are the big themes that you like here in India?
Well, I think what we've seen is that India has been quite resistant compared to many other markets, especially emerging markets. If you look at how difficult China has been, there's a theme going through, though, that we've seen that where, if you like, policymakers have tried to buck the market, they've been punished. It's happened in Japan, where policymakers have not wanted to increase interest rates, so the yen has collapsed. It's happened in the UK, where Liz Truss tried to really buck the markets. And one has to wonder whether it's not happening in China too, where the authorities are tending to focus very much on political policy moves rather than economic policy moves. I think the one advantage is that India is still really looking much more towards market issues. The government isn't looking to intervene too much into the markets. And I think that's a positive at the moment because there are some signs of positivity, even though the overall global picture is negative. I think some of those signs of positivity may be relatively temporary, looking maybe perhaps through to the end of the year. But certainly that is enough to hold some markets, and I think India is one of those, give some support under the market at the moment.
All right. Hi, Richard. Morning. Nigel on this side. Well, I want to ask you about a couple of factors. You're not in the camp that believes that, the Fed put is existent in the first place. So my question to you is, how many more rate hikes do you believe the Fed has in its kitty? That's point number one. And the second factor is, we are bracing for a recession, a slowdown globally as well. Europe is in a bit of a mess. Do you believe that for global equities, the lows that we saw in June 2022, that will hold out?
Well, I think the first one, how much is the Fed going to tighten? It's really a question of how much would they like to tighten and how much do they dare tighten? Because obviously interest rates have been so low for so long. There are all sorts of zombie companies, zombie organizations, zombie employees in the markets that have really been held in place by low interest rates. Now, if interest rates go up too much, we are going to see the economy precipitated into a recession. So I think the Fed probably have to play a very delicate balance between putting rates up and trying to control inflation. I don't think they're going to succeed in controlling inflation unless they put rates up. So they're going to have to make that decision. In Europe, I think it's the same kind of thing, but perhaps I think Europeans are maybe more used to higher interest rates going up. So there's more leeway there, but perhaps there's less conviction among the central bank there to do it than there might be in the US. So I think that decision is really going to be tempered very much on what the central banks think they can get away with at any particular moment in time. But whatever happens, I think they're going to have to stay on a tightening basis in order to keep inflation in check.
I take your point that inflation is not looking like it's going to be, controllable anytime soon. My only point is whether a bottom has been put going by the overactive central banking action we saw. But be that as it may, with China now, in a kind of an untouchable spot because of the political developments, would you expect more money into India? And secondly, where? Which stocks in India?
Well, I think that, yes, there's always a chance that investors are going to move. However, I think global investors will tend to retreat back home first and then maybe look at other markets to move in terms of allocations. People are, I think, generally on the more conservative tack. And when they do that, they tend to return home rather than reallocate to other emerging markets. But there clearly will be some sort of spillover. I think the issue with China is that at the moment, it's truly uncertain. And by that, I mean, investors like to have some sort of probabilities. Is the market going to go up? What's the probability? Is the market going to go down? What's the probability? In China at the moment, it's uncertain. We have no probabilities. We just don't know. And in that sort of situation, investors are going to retreat. In terms of India, it's always difficult for somebody outside to really look at key areas of the market. But just in general terms, as a multi-asset investor, I tend to sort of look at a market and say, what is the economy good at? India is very good, for instance, at generic drugs. It's very good at certain elements of the economy, certain industries. And as a multi-market, a global investor, you tend to want to focus on where the country is good at. France is good at luxury goods. China actually is quite good at electric vehicles, so I wouldn't be totally out of China whatsoever. But I think what investors need to do in India, if you're looking at the foreigners, is to say, where is India special? Where's the economy special? And really focus on those sectors.
All right, we will leave it at that. Thanks a lot, Richard, for joining in, and have the best week. And thanks for your Diwali wishes once again.